This is Alan Bush with the Daily Financial Forecast for Wednesday, April 30th. Stock index futures coming under quite a bit of pressure this morning. This after the 7:30 economic reports coming in on the weaker side. We did have the ADP employment report for April showing an increase of 62,000 when a gain of 125,000 was expected. Also, we had the first quarter gross domestic product report annualized declining 0.3% when a 0.2% increase was anticipated. So today's economic reports, however, put more pressure on the Fed to more aggressively move to additional accommodation, and I think those effects will be felt later this year. Currency markets seeing the dollar index a little bit higher, but likely to give back much of the gains, I think, later today, as interest rate differentials still are likely to undermine the US dollar index. We had the Eurozone economy growing by 0.4% in the first quarter, exceeding market expectations. Also, we have the Bank of Japan holding its policy meeting on May 1st, and it is widely expected that that central bank will keep its key interest rate unchanged at 50 basis points. So looking at all of these financial markets, it looks like the dollar index is likely to be the weakest, even though it is a little higher today. I think pressure will develop on the dollar. And I think some of the other currencies, especially the euro currency and the yen, will advance from current trading levels. And in the interest rate futures markets, seeing prices just mixed, really underperforming the news, just a bit of a recovery in futures with the 7:30 reports. Still looks like the Fed is likely to remain on hold at the upcoming May 7th meeting, but a rate cut from the Fed very likely at the June meeting, and there should be 4 rate cuts. At least that is what markets are factoring in for the rest of this year, with the first rate cut coming in June. Also, it appears that there will be 2 more interest rate cuts in 2026. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.